We all know the real estate market in San Diego is hot. Is it too late to buy? What do you need to know about this market? Inflation, interest rates, real estate values. My good buddy Cideer Saco is here from Century 21 Award. How you doing, buddy?
Doing great, and thank you for this amazing opportunity, Derrick.
Absolutely. Just wanted to chat with you about this and see kind of, okay, where do we begin, with where this market is, and am I too late to the party if I want to buy real estate right here?
Yeah, so this is a great question, and we get it all the time. And I always say it's never too late. It's evaluating your situation at this market. How you doing? What kind of job you have? How confident you are that you're going to have this income for the next 3, 4, 5 years, and then take it from there.
Yeah, where do you want to be? Where do you want to live? Can you plant your flag somewhere? The best time to buy real estate is always 20 years ago, right? I mean,
Absolutely.
That's the answer to the question.
Exactly.
When is the right time to buy? It was 20 years ago.
Right.
Or as far back as you can go.
Right.
Because the graph for real estate values over time just looks like this. Go back to the 1700s, go back as far as you want. So the reality is there's ups and downs, of course. It's not a straight line, but it does look that way when you zoom out. So you have to zoom out. That's hard to do.
Right.
It's hard for, I think, most people to zoom out a little bit and go, all right, well, what is this going to look like in 10 years, in 20 years, in 30 years from now? Very, very hard to do that. And I think most of the time we're sort of just attached to, okay, what do I want right now? I need this many bedrooms. I need a yard for the dog. I need this, 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 and this. And there's nothing wrong with making a needs and wants list, of course. But there's other things that are at play that people have to be aware of. A good example, just on the statistics side of things, is how many more households there are now than there were, let's say, 10 years ago.
Right.
Millions more, Cideer.
True.
Millions more households. We don't have millions and more homes.
Right. Shortages in homes, very low inventory. But I talk to my especially first buyers, and I tell them my advice that will never change. It's to have a property, to own a property. You start making wealth when you own a property.
That's right.
This advice will never change. If you don't own a house, a home, get one. But of course, where you can handle it, your budget, but you need to start somewhere. If you can't afford that 5-bedroom house and 4-bath, start with a townhouse, with a condo, with an apartment somewhere. But that's the first step, and that's where you're going to establish your wealth, and then the next step is going to be easier.
And one thing and this is a good way to look at it too, just a different perspective, is you don't hear people saying, man, I wish I hadn't have bought that property 20 years ago.
Right.
What you will hear is people say, gosh, why did I sell that property 20 years ago?
Absolutely, and all the time.
All the time. It's 100% of the time.
All the
That's
time.
always the question. And same thing for myself. I look at stuff and I go, how many properties did I look at that I was going to buy, or that I
Right.
thought about it, and I
Absolutely.
decided not to?
Yes.
I look back, every single one of those, I wish I had pulled the trigger.
Right.
Every
right.
single one.
And it does not matter the location, it does not matter the state or the country. It's all over the world. When it comes to real estate, think like you said, 20 and 30 and 50 years ago, all these properties anywhere in the world, they were a lot cheaper.
Mm-hmm.
So basically what happens is real estate is going to keep on going up because you have the cost of living and the value of the currency that's just normal to go down. So where are you safe? 100% with your investment? In your properties.
Yeah, and the nice thing is, a buddy of mine said this to me recently. It's pretty funny, because I talk about cryptocurrency a lot. And he said, can't live in a Bitcoin.
That's 100%. That's a great statement.
Very accurate.
And I tell my investors and buyers, there's one reason that this is always going to be great, and real estate is going to be amazing and going up, because people need a place to live.
Yeah.
Right? Even when we talk about gold is great where, people to invest, but still, it's not as needed as a home, right? You need a roof over your head. So that demand is going to be around forever, and it was.
And the thing also that's interesting with gold is, as the price goes up, you have more mining that takes place. So it sort of self-regulates.
Right.
That's one of the things that's interesting about it. Whereas with housing, you could say, well, when prices go up, builders do try to build more. But now we've gotten to a point in this country, and I'm not even talking about just San Diego now, in the country, where builders have built in all of the easy places to build.
Right.
And there's not too much more farmland that you can take down and subdivide because we also have to have food.
Absolutely.
So we have a real constraint right now in just land nationwide. It's particularly bad here in Southern California,
Absolutely.
where we're sort
Absolutely.
of bordered by a country and an ocean and a military base, and so there's just nowhere to go.
Right.
And it's no surprise to me why real estate is doing what it's doing. But I agree with you. The first thing you do as an investor is you buy your home. I talk about cryptocurrency, I talk about Bitcoin, stuff like that. Shouldn't even consider it until you own your own home that you're living in. That's your first number one goal, because if you do nothing else but that, you're going to be okay.
Absolutely.
I don't know what will happen if you buy this stock or this coin or that coin, but if you buy your home, I know 30 years from now, you're going to own it free and clear, and you're going to be okay. And that's all I know. And then here's another thing, too, we can talk about today, is worst case scenario. So what's the worst case scenario? We went through a global crash that was caused by Wall Street and what they did in the mortgage industry, but it hit real estate really, really hard. That was about as worst case scenario as you can possibly imagine, a global economic crash caused by the real estate industry. It can't get any worse than that, can it?
No.
Here in San Diego was 9.5 years. If you had bought at the very top, if you bought at the absolute worst time, right before the crash,
Right.
9.5 years later, you were back at even.
Right.
That's your worst case scenario.
And a little bit more, actually. We're higher than when we were in 2005.
Oh yeah, big time now.
We surpassed that.
Yeah, we're 25 or 30% higher than that.
Right. Than the highest.
Yes.
Yeah.
If you bought the worst possible time before the crash.
Exactly.
So, that is, if you want to look at just worst case scenario, there it is. That's why I think if you have a long-term outlook, if you can think 10 years,
Right.
20 years, 30 years from now, you can feel very comfortable.
That's
in
a
your real estate
very,
investment.
very important point. And I tell my client this all the time. Don't just think like, what's your mortgage right now and what's the price you're paying right now. There's one thing I see a lot of people don't think about it when it comes to buying. As long as I tell them, if you have a secure job, if you have a secure income, at least you look further, 5 years from now, and you know that you have that income. What happens is you start today with this mortgage, with this number, right? Now maybe it's a little bit hard for you or a little bit high for you, but think about it. 5 years from now, the number's the same, but the value is going to be a lot less. You're going to feel it a lot less because your hourly rate is going to be a lot higher. Your income's supposed to be a lot higher. Everything else, cost of living is going to be up. So that number is going to look smaller. As time goes by, that number is going to be smaller. So think about it. Well, people that bought like 25 years ago, right? Their mortgage maybe was $750. Back then it was a lot to them. But look at it now. It's a pocket change.
You're describing something that I talk about in my seminars in a different way, and I really appreciate it because I'm going to use this. I call it hedging. So when you buy a home, your primary residence, technically you wouldn't call it an investment. You would call it a hedge.
Right.
I'm hedging my housing expense. I'm saying, you know what? I'm going to hedge my housing expense right here because I know I can look at a chart, I can look at a graph, I can use common sense, I can look on Zillow or wherever. Rents go up, home values go up,
100%.
which means that next year it'll cost me more to rent this place that I'm in. Next year it'll cost me more per month to own the place that I'm in. So next year it's going to cost more, and the year after that it's going to cost more, and the year after that it's going to cost more. So if I buy today, I'm hedging in. I'm locking in my cost. I'm saying, all right, I'm okay with paying this much, but even though I'm locking it in, the market's still running.
Right.
So the rent amount I could get for that home is still going up every year. The value of that home is still going up over time. So it's a hedge. And a hedge is something that's a smart thing to do when you know something. For example, Southwest Airlines, they hedge their fuel costs by buying oil futures. They lock in the price. We're going to lock in that price for the future price of oil so we can sell a ticket to you to fly from here to there 2 months from now, right?
Right.
So hedging is a smart thing to do when you know something. You know you're going to need something. Do we know if we're going to need housing or not? Of course we do.
Of course.
So we should be hedging our expense.
Absolutely, absolutely. I tell my buyers too. I say, think like an investor too. Even though you're buying your home, right, your first residence, but think like an investor. An investor, especially rental investors, they think, okay, if I break even this year, if you buy me a house and I break even now, this is great because next year I'm up $150.
Right.
The year after I'm $300 up. What that means for the buyer is your mortgage is going to feel lower and lower and lower, right?
Yeah.
And to a point, 10 years from now, you're like, it's going to be not even, it's going to be 5 days of your work. That easy.
And the opposite side of that is, or I guess the parallel side from a renter standpoint, a lot of times renters will say, well, you know what, I could buy a place I know for $3,500, but I've got this place I'm renting for $2,700. And I like $2,700 better than $3,500. Problem is, how long is it going to take for that place you're in at $2,700 to get to $3,500?
Absolutely.
Because if you wait until then, it's going to cost more than $3,500 to own it.
Right.
It's going to cost $4,000 now,
Absolutely.
or $4,200 now.
Yep.
And so that's the trouble, is that you know the rent is going to go up. You know it's going to go up. So if you can go out and get ahead of it and get fixed in, at some point that's going to be saving you quite a bit of money on a monthly basis.
Yep.
And it may require a little bit of sacrifice, but it's probably going to be worth it if you look at long periods of time.
Absolutely.
And that's what I think we have to do. What we could really train, if we could really train something in kids to understand about real estate, is that it's a long-term thing. And I think probably the reality shows kind of hurt us for that, right? A lot of the flip shows and stuff.
They did. I can tell you that I felt it in people. You know, they did.
Yeah, it's just too short-sighted.
Yes.
You know, thinking more long-term allows you to win and make a more wise decision. And I think here, when we talk about real estate, we talk about things that are going up, inflation. People have seen supply chain issues. People have seen the costs of their goods going up.
Right.
The grocery store bill is more. Interest rates have gone up recently. And we kind of expect that that's going to continue through this year. So you're seeing a lot of these things that are impacting people's pocketbooks. But the biggest check you write every month is still either your rent or your house payment.
And it will be.
And that's what it's going to be.
Until you own that house, and years later, that's not going to be the biggest ticket you write.
Right, exactly. And that's what it takes.
Yeah.
Get that clock started is what I always say.
Absolutely. Absolutely.
Cideer, it's been great to have you.
I love this meeting, and thank you very much. It was a great opportunity.
Thanks for joining us today. Hey guys, share this video with your friends. Let's help make them smarter than everyone else when it comes to thinking long-term about real estate. You can be smarter than the market. You don't actually have to be a genius. You really just have to get on the ride because it will work out for you in the long run. We'll see you soon.